and share these videos. Tonight's video, we'll talk about the rotation trade from different asset classes and what that really means going forward. Let's get into tonight's video. Well, folks, welcome. We had an interesting night last night. Still having some issues with the channel here with some technology. That's going to change as soon as I put the new box in play. But it was interesting last night with the State of the Union. Trump was classic and calling out people in the room. I thought that was an interesting event. Didn't really hear a lot that I thought was exciting. I talked a little bit about this in the Substack last night, and really there was nothing really forward-looking, but it really was interesting that some of the comments afterwards, it was pretty well received. I think it's funny that one of the gaslighting routines out there is that all the mainstream media's telling you that Trump's polls are way underwater, and they're using the Washington Post as their polling entity. So guess what? What it does tell, I thought it was kind of funny. I had an interesting thought. It tells you that 40% of Democrats like what he's doing because no one else watches that channel but Democrats. But anyway, so I think from the standpoint of what to expect for the rest of this year, we got the new Fed coming in. There seems to be just this positive tone. I've been going on and on for days, weeks, months, that there's no negative environment coming. There's no recession coming. And I wonder what all those folks calling for some kind of crash a couple of days ago, what they're doing today. Probably not having a lot of fun. So we've had 2 days in a row. That's fun, up. We saw crypto, mainly Bitcoin, have like an 8% day. And that was, as I was talking about a number of days ago, that 60,000 level was key. So we had a decent rally. We'll go through that here in just a few minutes. As I've told you, I'm coming on just a touch later so that the database has been run. It looked like we're well on our way to finishing that, so I can just go through a normal session as how I usually go through the WaveTech database first. So we definitely want to do that. Hopefully we'll have no freezes on TradingView. It's been interesting. I have seen some glitches coming in TradingView over the last several days. So hopefully it's been pretty smooth today until I go live. Then we'll have some kind of glitch. But anyway, let's talk a little bit about, we're still seeing that rotation happen with the Russell and the mid-cap. That's still gradual. I think we're going to stay in this kind of gradual shift in things from the standpoint of the database. I'm trying to find a way that I can dig through some of these symbols that will tell us that the rotation or the strength in the database is coming from where I think it's coming from, which are some of the secondary, the mid-cap, small-cap stocks coming into the database, keeping the relative bullish numbers in play. And that seems to be the best I can tell right now. I'm working on a way to dig deeper into the constituents when we get big buy and sell numbers. I came up with something I'm testing right now to give me a better ability, which to see some transparency deeper into the database to give us all a little bit better understanding what's going on from that standpoint. It's kind of interesting because I have my own breadth indicator on not just things over a moving average or something like that, but things that are even rotating in or out of short-term trends as well as the intermediate trends, which gives us, all of you folks watching this and getting my Substack, a bit of an edge on some of the longevity and forward-looking elements of the database that I talk about a lot. So we'll get through that, and I think we should be able to get through things pretty quick. I'm not looking to hang out a long time. Please post your questions at the end. I'll come back and look through the timeline, see if there's anything there that we can talk about that I can expand on. So we'll go for that. Let's go ahead and get into the database here and take a look. So we're back at 62%. So we had a positive rotation. You can see here about 650 new buy signals, only about 260 on the sell. So we got positive and bullish sentiment over here from the rotation. We're back above 62. I think we're pushing just in right at 60. Might have printed 59. And anything over 58 is good. So we're working at 58 to 62 basis on the rotation as far as the database goes, which is positive on the short term. We're well above the 62% on the intermediate. So we have just a positive rotation going on here and plenty of trending symbols around. For instance, and right here at 62, that's 8,892 symbols. We have 14,188 symbols in the database. And, you know, you can't ask for a better environment really from that standpoint. So individual stock picking is the game as we come through 2026. Probably a good reason to have WaveTech around because it can monitor 14,200 symbols at once, and you can put your symbols in there and see if you're hitting trend modes and those, and see all the stats on the individual symbols and how well the models trade, all complete transparency. But the reality is that this is a very positive market. And, you know, I think when you're just drawing trend lines on an S&P chart or looking at, you know, how many individual symbols because you or me actually monitor? Can you monitor 14,200? No. You have to have some kind of quant environment like this. This is an environment, as most of you know, launched in 1998 and managed hundreds of billions of dollars and over the years. And, you know, the reality is it's just a great insight. I was talking to somebody earlier a couple hours ago, and I'm working on getting full access to the database to run some real algorithms in there, looking for some, I've always been saying for over a couple of decades that I believe that inside of the database, I talk about the percentage numbers, the metrics of 42% being key to maintaining a portfolio, a trend mode and an overall picture. So this is looking at 30,000 feet. So I'm thinking once I can really get some solid metrics and I can start to do some data mining, I'm going to find some things that, who knows, they might be so good I might not tell you guys about them. I might keep a secret of, but I'm joking, of course. But anyway, so everything's fine in the database world as far as what we're seeing, what the rotation's telling us, what the trends are telling us, what the economic numbers. Of course, we got some weak numbers over here. I have on this screen over here, I also ran some of the, I've already run the data sheet, so I'll bring in when we do the S&P, I'll talk a little bit about some of what the quant, I ran the big data sheet here. Maybe I'll pull it over on the screen so you can look at it with me. But we got NVIDIA out. Nobody really cares right now. What are we down at 1175? After the release, the futures popped about 7 or 8 handles. They've given that back. I'm not sure it's, everybody was looking forward to it, but probably just so as long as they didn't miss on the downside, no one really cares, maybe is all we're seeing here. I'm not sure that it's not having any real effect. And the numbers weren't that, I mean, they were solid numbers, but no bubble. You know, maybe tomorrow they'll decide to pull out the software is going to be destroyed by Claude again. who knows? I can tell you that Claude owns the world. I think I showed you folks the other day a project that I'm working on that I have been programming. Basically, this WaveTech model is getting refurbished on using AI, and it's coming along really strong. I don't know how long it's going to take me to finish, but I've got this data sheet ready to go. If I get that going, it'll be pretty special. So, but yeah, so everything is there. There's the banks did pretty good today. We saw the people like Snowflake, all the Salesforce, all these guys bounce back because yesterday they were being disrupted and destroyed. Today they weren't. And they may like pull the story out. I've talked about this, especially, it's not just social media. We have a different types of reactions that I've noticed we'll say over the last couple of years, the way that we get these big major shifts and right now, because of the caterpillar mode, I'll show you in a minute, that we've been locked in, we're still going back and forth. And when I show you the S&P here in a minute, it's projecting, a potential downside for today, and it'll be interesting how things play out here. So let's go ahead and we'll get into the futures here. You can see we've got a red bar forming. We had two up, but this, we kind of broke out, and there was something in here. I did notice this earlier meaning the last several days. Okay, so there is a Fibonacci target right here, 69.77. We actually hit that. We hit that today. Let's see if I can get that to come up. Yeah, so here's 83 high. So 69.77 was this first fib target. We've got other targets in here. We've got fib target 2. Let me just bring this up over here. So fib target 1, 69.80. Target 2, 70.67. That would be this number up here. You can see where the dots are. And then the last one would be 71.21. And that would throw us into an ATH, or all-time new high again. But this overall pattern has just been just a mess from the standpoint. Total non-trending, trending for the last 2 days, but choppy. And we're getting 3 to 5 day trends. This is a daily chart we're looking at, and that's about it. And then we get a reversal. I'll show you the sheet here right now. Let me see if I can bring this over while I'm in this conversation. All right, so here's the data sheet. I'll zoom in on it just so you can see a little better. It's got a bearish, 64% bearish signal. So we're looking at the potential here for some downside. The PPMs are turning back negative a little bit here, and we're still looking. It's giving us a trade out here, and this is one of the nice things. This comes out on the Substack every night. So kendallreport.substack.com, $8 a month. This is a trade out there. If S1 holds and R1 targets, so there's a decent number. 69.80 is the target on the upside. We've kind of hit, and S1 right now is right here at 69.54. So we're trading just below it. So that trade that trade is active right now, looking for a rebound, almost 30 handles, 25 handles, something like that. So that's a pretty good spot there. But anyway, so this is the sheet that's already been run. I'll probably update this just so you know, when you get these sheets on the Substack, these numbers right here, these are market grid numbers, and what's attached to them is probabilities of being hit. So you're looking at 85% to get up and print close to 70 even in this here, and we've got a pretty big range, 68, 84 to maybe 70 even. 70, 21 is the next number up. So volatility looks like it's trying to kick back in here. So if you want these sheets, I do them on NASDAQ, S&P, gold, silver, and Bitcoin every day. So you can get those in the Substack. Soon, we're going to have them on any market we want. You'll find out. It's getting very close. All right, so back to the charts. Algo's still in this choppy range that I've been talking about forever and ever, and it's held true. If we come back, I've talked about this all the way back, in October, other than this one little break, we've been in this same range 4 months. This has not been anything that that we've been out of this. The regime is no regime. It's sideways, choppy. Because of the database, if I were putting some numbers on here, we have underlying bids in the markets because of the positive aspects of being around 62%, both on the weeklies closer to 65, 67. On the short term, we're pushing the 62. This is like I said in the beginning, these are positive markets. Not likely. These are typically not the kind of markets that will collapse out of nowhere. Everybody is worried about NVIDIA. We'll worry no more. We've got the numbers. We know what's going on. So nothing there to really worry about from that standpoint. I actually think we'll stretch our range a little bit here. See, I think I put that thing in the background, which is bad. So yeah. Let me come up on screen. There's some sensitive stuff I don't want to put on the internet. All right, let's come back up over here. We'll just look at this sheet just for another moment. Yeah, I'm just seeing. So this commentary is just how, when I built these data sheets, I built them to go pretty deep into the configuration on the PPM. So it's giving you a lot of there's a lot to be learned from this top section here. And then also when we get down into here, and one of the other things, I love these sheets personally. I hope you folks use these things because right now, upside active, downside active, and it's giving us that target. This is that 84 target where we're trading. We're trading below this number right now, so it's leaning bearish, and it's just, these are so useful, especially in targeting trades, consolidation range for day trading positioning. So I think this is a pretty solid analysis of where we are right now. And I wish you guys had this little side logic that comes out of here as well, telling you what I did. I actually revised not some of the metrics calcs, but I found some little syntax errors in there last night. And thanks to Claude, I'm becoming quite a talented programmer, or guiding my talented programmer, which is Claude. All right, so let's move on. Let's take a look at the NASDAQ, and I should like I said, should be able to get through things pretty quickly. I'd like to see us have maybe a little more time for questions. So please put stuff in the timeline, in the chat, just so that when I get done, we finish early, we can spend some time and go through some questions and maybe some things that I can help folks with. So let's go ahead and go to NASDAQ. The other thing we did get, NASDAQ got what's called an RTX sell. And I'm going to go into something. I'm not sure. I'm hoping this individual even is here right now or sees this. And they posted something on X, might have even been on the Substack comments, but they're using the STX tool, because I always talk about the STX buys. That tool is not a buy signal. You have to, that's a STX counter, and there's a certain amount of sequence of counters, but we developed that on SPX specifically, and you have to have 5 of those without having an adverse number. So don't use it for STX buys, please. I'll try to, that's not what it was designed for. It was designed to count consecutive. So I'm not going to go through how that indicator works right now, but you're using it wrong. That's why you're not, yeah. So, but when we see these little day-to-day, like on one bar, an STX buy, or in this case, an RTX sell on the NASDAQ, is literally for one day, maybe 2 max. So typically when you see that, you'll get a reaction. We're seeing a red bar both on the S&P and the RTX on the NASDAQ. So we maybe get 1 or 2 days, but I want you to pay attention here, because this was also relevant on the S&P. What we're getting is the sideways movements and slightly negative. All the indicators, I mean, this has been one of the, I've been through times like this before, especially doing daily videos like I'm doing, is that you'll get consecutive lists. These ranges will stay in place for months sometimes. And we're going to break out of here. I would argue that we'll break out to the upside, but we'll see what continues to happen. If we stay in these upper ranges of the bullish percents on the database, then the bias is going to be, as long as we stay 58, 52, 58 on the short term and above 58 on the intermediate, then all biases are going to be to the upside. And so you're going to have breakouts to the upside, not likely to roll over until we get under some of these key metrics. And these things work. I've been using those metrics since 1998. It's been a daily principle and signals. We actually have a model that runs on Portfolio Expert, which uses those metrics for the buy and sell signals for long-term signals. And sometimes we'll be in a signal because of that for, a year and a half sometimes. It doesn't trade very often because certain things have to happen. And one of the things that I'm actually doing is building that model into the outside module that I'm putting together that will actually give those signals, and everybody will be able to get those eventually. And it will give you analysis, because everything I'm doing now going forward with software no longer will completely depend on you personally to understand the metrics and know when it's a buy and sell or what to do. There's going to be exactly what we'll call it WaveTech intelligence, where I'm building the intelligence and how to interpret, like one of these models that I have here. I can actually show you fairly quick. So I thought it was on the page, so it wasn't, but there's intelligence that reads and understands. Like I said, I'm working on these final scripts that I'm going to give everybody that has the indicators. If you have the indicators, and I'm going to give you the script, and it will do the analysis of the indicators, so you don't have to train and watch all kinds of videos and stuff. You can still do that to understand a lot of the nuances, but these nuances, you'll just take a screenshot of what I have on the screen right now, and you'll have this script. You'll need Claude, probably a free Claude. You'll be able to do a couple scripts because they're fairly token heavy when I build them. They're sort of like my live streams. When I get into programming, they get very deep, but it will actually write a summary and actually do kind of a mini newsletter on any market you put up there, and it will go through all those regimes. So you don't have to know everything anymore. And I finally realized this. So there's going to be a number of free scripts, and they'll only work if you have these indicators and have the setup. So, but that, man, that's just a game changer. Even for me, I love when I run some of these scripts that I have that, and I'll be showing them to you soon. But that, just to see the analysis and go, man, that's so spot on. It's amazing. So anyway, but all of this, these patterns that we're seeing, like here, we're still seeing in the from the Nasdaq, all of the moving averages are still moving down. So what we're seeing, this is the sign. We're going to go to the Russell next. This is the sign of that this regime is kind of shifting down. This is still daily. It's not drastically down like a collapse, but generally speaking, NASDAQ, this is why the NASDAQ is lagging. There's this little slope down. You can go to next level charts, and you can go to the weekly and all those things, and that's going to be just help you to understand what regime we're in, where are we at in the big scheme of things. And I probably should have said this up front. I may be late. I'm actually participating in a little symposium, and my lifetime on the symposium, I think it's around 7. It's only a 20-minute deal I'm supposed to do, but I don't know how those things go. So I may be a few more late tomorrow night if you're still watching here and hanging out. But I guess I should have found out if it was okay to invite other people. But the point is, this pattern here is there. So since I mentioned the weekly, let's take a look at it. And what we're seeing this is interesting because the short term is telling us that we're flat to slightly down. The intermediate, just looking at what the WTR is, the predictive moving average. So these are the dots are predicting what these moving averages are going to do in the future. If we come back to the algos, you can see on a weekly basis, especially on a short term, we've got a bias to the upside, matches out perfect. Those of you who've been around the channel know I love to have multiple things telling me the same story. The clustering. So the clustering is we've got the weekly telling us that we're still in this positive regime that's going to push up as we go down the trail. We have the database on intermediate that's telling us June, July, before we probably even need to worry about any kind of even a 5 or 10% correction of any sort. And then we see everything just kind of hanging out. Then the short term is just telling us flat to down. So that works as well. And I like to do that correlation when you're taking different time series. So whether you start like short term, you could even go down to a 4-hour or 1-hour sequence and try to coordinate maybe the 4-hour versus the daily versus the weekly to see if you can develop a story of are things in line or are they different? So like, let's say weekly's bearish, but daily's bullish. All that tells you you're in a choppy range, and you kind of can define where the ceilings are. You're hanging around on this channel. We're trying to figure out if you're not using a product like WaveTech that gives you clear buy and sells and allocations to run your portfolios. You're doing discretionary trading. What I'm talking about right now is you need to be able to compile and come up with a composite thought on where you are in the markets. If everything's up, daily's up, weekly's up, everything is positive, database is positive, then it's easy. Buy, hold, stick your head in the sand, come out maybe in a couple of weeks. You want to monitor, but I'm just saying that when you get those regimes you get an alignment of your thoughts, and you know you have something pretty positive. And I'm usually not completely backwards on trends and on market events because of that thought I just shared with you. So that's something you can definitely do. Yeah, we'll go through silver here in a minute. I see a couple of comments up there. All right, so let's move on. Let's go to let's. I'm going to just use the cash index here for the Russell. Weekly, you can see that upward slope, what I just talked about on. Let's bring it down to the. Let's bring it down to the daily. So daily's flat completely. Maybe you could argue a slight bias, but we do have, it's really just flat, and more flat than anything else. We do have some downward targets. The minimum target downside is 25.36. There's not any confirmation down here in indexes that you could argue that the PPM 3 or the 40 period moving average is starting to decline, but I'm just looking at some of the numbers here. Yeah, it most likely, this is choppy sideways. NASDAQ still slightly negative on the daily, so that spread, the rotation should show a little more positive, leaning towards the Russell. That should continue. I'm probably more positive on the rotation in the mid cap than the Russell. It's actually leading right now. Let me just give you those numbers real quick while I'm thinking about it. So we have mid cap up 8.6. It was 8.4. It was up a little bit today. Russell up 6.3. S&P up 1.5, and then the last, the composite down 0.4. It was down 2.6 the other day. So the rally of the last 2 days we've seen is basically just flatline the NASDAQ right now. But these type of, if you're running portfolios or doing anything like that, anybody, institutional investor or mine, if you're running those portfolios, you still kind of want to overweight slightly towards those Russell and toward the mid cap. And that's probably a good place to be for at least the next 6 months. And the key, which I always talk about, is the yield curve. If the yield curve gets a little steeper, it needs to be minimum 75 to about 125 basis points out. It's currently like in the 50 range. It has steepened, but it needs to be steeper. And the recent decline or rally in the bonds and the 10-year has kind of flattened that out a little bit. So still struggling because it needs that Fed input. We need at least 50 basis points on the Fed funds. The Fed needs to lower rates 2 more times minimum, probably 3. Then we'll be in a place that when we get there, and I've been saying this for maybe 2 years, when we get there, we're going to see the true rotation trade come into play. Right now, it's just kind of steady. It's there, but it's nothing that you're looking at like, I've got, I guess when you look at it and you say, I've got to have this trade on. Right now, a lot of people are talking about it, but I'm not sure how many people are reacting to that. If you had a blended strategy in WaveTech right now, you're already seeing it lean that way. So that's that. Okay, so let's talk about this. Russell. We went through all the indexes. We'll go through. I'm going to bring up the 10-year. Let's just do that while I'm talking. So this, I was looking earlier. Look at the algos here. The 10-year is going to push back towards 410, 415 again, probably 410. We got down all the way down here. We got down to what, 403 on that low, and then here's the secondary low. We got to 402 by one tick, and now the algos are starting to suggest we're going to come back into this range. So the 21 period moving average is going to be what is the supply line. So, and since this is interest rates, it's inverted. This will be the demand line for, we get back to 408, 410, you're going to see the 10-year start to find a bid again. So right now it's just a little relief. We had a pretty substantial decline and a rally going in here, decline in yields and a rally in bonds from all the way from 430 all the way to 402. So decent rally for sure. And now we should get some kind of pullback and consolidation. This should have little or no effect on the spread on the Russell versus NASDAQ, Russell versus S&P. The more drastic is NAS versus the Russell. So that trade should stay fairly solid. This is not going to be enough to disrupt that trade or how the cash flows are going. All right, so let's do gold. Gold still got that. Those of you been around for a while, I talk about this trade here. Let me just blow this up just a touch. So this, if you recall, this was after the big reversal back on the, what was that, the 29th of Jan. We got this big, this is the metals reversal. When we got that, we got what I call the volatility bubble on the market grid. So we have to consolidate and normalize that bubble before we'll get the next movement. So we did that here with sideways, and now we're starting to get somewhat, there's a very shallow trend coming out of here. Gold, it's going to be a big deal to take out this 5626 number that we printed back on that day. But we are starting to see a little bit of uptrend come out of here. But look at the algos, they're just kind of flattening out. So nothing drastic, but we're going to crawl above these moving average, stay above. This is the daily, the 10-day, 10, 21 day are going to be extremes. You should be able to buy dips against those numbers, okay? Not a lot more. We'll keep that there and get the Substack, and that way you can be updated on what I'm doing it later tonight when we update that. So silver is, I've been arguing, is in a much different configuration, maybe even a different regime. What we did yesterday and what we're printing up here right now, see what we got here. Yeah, we're up 1% here. We're printing into the 90 handle. This is pretty close to probably all you get. We printed down to 60, we'll call it 64, but 63.90. We've climbed back up in here. You can see the algos, they're just projecting that we're going to go sideways, maybe trade into here. So somewhere around, there's something else. A quick lesson here. Whenever you see moving averages, so the red line is the 21-day moving average. The white line is the 10, which is the lowest. And then you got the 40 kind of crossing in the middle. Whenever you see basically a chaotic, so when you're in a trend, the fastest moving average will be the highest. If we were in an uptrend right now, the 10 would be the highest, 21 being in middle, and the 40. Those of you who've been around back in my floor trading days, we had this little thing we would do. If we were in trend mode, I had some buddies, we traded in different pits. They'd like ask me, hey, are we in trend mode here? And what that means is that the normal stack in a moving average configuration will be, obviously the shortest will be the closest, markets going up would be the closest to the market action, and then the 21 and the 40. So that's why I have three different links, so you can kind of get that configuration. You can see when we were going up over here, you can see this is exactly the configuration I'm talking about: 10, 21, 40. And when you start to get into this what I call randomness, or where it's basically a spaghetti bowl, that is a trendless market or a corrective market. So there's more than there's a lot of things that can be garnered from looking at moving averages. Trends look like that, where they're stacked like that in an uptrend, and a downtrend is inverse. The fastest average is the closest, and you can get that. Where we are right now is complete corrective after the big collapse back on the 29th. Everything is still in corrective mode, and you could argue from an Elliott ABC, this is X, AB, there should be one more down, and we'll find out whether this configuration where I'm circling around with my cursor, whether that's the final low, and then we're going to go into some upward regime. But I'm gonna break this down just a little bit more. We're going to go to weekly on silver, just because I know people are wondering what we're dealing with here. Is this a new trend? And it is not. And this is I highly suggest that you folks, when you're doing this, that you go to different time series. So you should have a short series, even intraday trading. You should have, like I use 1 in 5 trading intraday. Because I'm a scalper. But if you're a little more trending, trying to catch swings intraday, you're probably maybe 5, 15, and an hourly, something like that. But you should have multiple time series so you can see where you can identify the trends. The last bit of this mini lesson here is there is a time series, like for instance, for me, weekly charts eliminate a lot of the noise within the trend. So the shorter you get, the more noise. But there's also where the chart looks most normal. Everybody kind of knows. You look at a chart, it just looks like it's flowing, it's got patterns. That's where this weekly comes in. We're potentially right now in the daily, where ABCX, ABC, one more low. But in this pattern, we're probably AB, and there's a bigger C, but there's good things around silver, which is this strong uptrend here on PPM2. We're looking at in trend mode at 3.03. Not only is it in trend mode, it's at an extended mode, which means it's quite powerful. So if you saw the value of the simple 21, you'd want to back the truck up and buy it right there. Okay, so that if right now that's at 67, but we probably go out is probably 73, 68, depending on how fast things get there. And you still have very positive value at the 10-period moving average. So 83.95 is your very short term off the weekly. There's a lot of power around that. And you can see what happened after the big collapse and the big reversal. We came all the way down to 21, which was the perfect point to buy. So if we look here, that was 77. The low was 63.90, and 62.56 was the 21-week moving average. So you should have been all over buying that. You should be able to run this out like in the miners or any of these things that have similar type patterns. But so long answer, but it'll be worth it. I'm almost there. Is that when you look at this, is that bubble on a weekly. So we still have several more weeks that we could go, and I believe the absolute ceiling probably on an extreme crazy is probably 111 on silver. That's sell everything that you've ever seen is shiny in the light. You want to definitely be selling probably around 111, but we'll update that if I come back. Let me show you where that number comes from, and then we'll validate that. That's this red line right here. I think it's. Let me see if I can find it. It's 111.4. It's over here on the far right where my cursor is. 111.486. That if we get close to that number, it should peak out and then we'll come back in. But what we're seeing from a confirmation standpoint, using the PPMs to confirm any possibilities, we're seeing the PPM 1, PPM 2 is flat, PPM 3 is down. We're not getting what we'd want to see is that the algos are predicting, and this can and will change. So let's say 2 weeks from now, if those algos are turning up, then that's giving us higher probabilities that we're going to hit that number. Okay. All right. Where are we at here in timing? 46. Good deal. Appreciate everybody hanging out, being patient to go the kind of deep dives in these markets. So let's do Bitcoin. So this is daily. I know everybody's probably excited about the big move. We got what? I think it was close to 8%, right? 6% on a closing basis. So 6.03. So nice rally. I talked about this target up here around 73 is probably a ceiling. The algos are already starting to turn already. And we also got a RTXL signal, which suggests we should have at least 1 to 2 days sideways, and those sideways numbers, real simple moving averages, 21 and 10-day moving averages are your target. So downside support. Let me just get this up over here. 66,900 is going to be a number, and then around, we're trading right at it right now, the 68 handle, 68, 66. If you look at the market grid, there's some possibilities. Get to Substack and look at the market grid and the probabilities for the trading tonight. It'll lay out all the probabilities and where your support's going to be. Is this the big breakout? There's some possibilities that as we go through, finish off this month and get into the next month, that we could definitely be there. But there's more likely, much more consolidation likely to be done here than just a moonshot. But the moonshot probabilities, and I talked about this several weeks ago, is going to be the 40 period moving average. That's going to put us at like somewhere between 73 and 75. We've got a fib target up here that's potential 78, and then there's a potential for an 81 handle. So this is a good pattern, and it goes to what I always talk about with the moving averages. This 40 is going to be probably the ceiling, the 40 simple average, and we're above both of these averages at the moment. So with the algos kind of peaking out today on the 21, there's some good stuff coming in. First, second week of March, we may be able to continue this rally, and that'll certainly give a lot of relief to folks in the crypto community that maybe can take a couple breaths finally, because we've been on the edge. Even a couple of days ago, we were threatening to break down and challenge the 60,000 level. And as I said several days ago, I remember saying that what we're looking for is, if that holds, then we got a catapult for these numbers I just was talking about. All right, I'll go through some quick questions. We're about 10 minutes from being an hour since we're starting, just a little late. So, um, yeah, I saw something pretty funny actually on the silver trade. I don't know if you guys saw that print that Cardone put out about his buddy that had 10,000 coins or 10,000 ounces of silver, and he was getting a 30% discount. I don't know if you guys saw that or not. Cardone needs to stay in real estate, okay? So he's making like a big deal. He couldn't even sell 10,000 ounces of silver, and he was getting a 20-30% price and haircut because he's walking into a coin shop with $750,000 worth of silver. So let me tell you how that's done. Okay, so if any of you have this, you won't fall in the category of stupid billionaires, okay, or ignorant. We'll go ignorant, not stupid. And all you have to do is you sell 2 contracts of silver on COMEX. There's your 10,000 ounces. You lock the price in. You tell your broker you want to deliver your silver, okay? And even if it's garage coins, like whatever, it's coins or just a bunch of silver in a pile, you can tell them you need to go to a smelter that will make up a deliverable grade bar for you or bars. And you take it to them, they melt it, they get it ready for delivery. And the delivery mechanism that's built on COMEX will cost you between 3 and 4% to do that, to include shipping, smelting, and assaying and certification will cost you 3 to 4%. And it takes about 1 second to transact because you just go on, if you have an account, a futures account, you sell 2 contracts and then you let your broker know you plan on going through the delivery process. That's it. There's no problem. And I think they're trading 30 to 50 billion dollars every day. So you can sell as much as you want, any day you want. And so it's when you think like a retail person, then you do stupid things. I've been preaching, like I had the viral tweet several weeks ago that did about 5 million. All I was talking about is understand the mechanics, understand the markets that you deal in, that you're trading in, understand how they actually work. You can ask ChatGPT that simple question: how do I sell 10,000? It probably gives you that answer or close to it. So and it's called exchange for physicals and delivery. I was actually on a gold desk in 1980, and I think we were probably the firm I was with also owned a big bullion dealer. And we were doing exchange for physicals. I always believed that we were one of the first trading desks around the planet because we had offices in Melbourne, Australia, Sydney, Hong Kong, New York, and Chicago. So we would get you could buy gold anywhere with us, and we would, if it was physical gold and you could deliver it to one of our retail units, we could do the trade there, or we could trade any of the futures, and we could swap out and arb out any of the contracts that we held on them. And this is, that was 1980. And so whenever you see, be careful. Like especially, I feel sorry for all the Bitcoin guys because they got so gaslit from all the crud of Tom Lee and Saylor and all these jokers out there that have an axe to grind that, trying to promote their own positions get involved. So, okay, I'm done with that. I just needed to put that out there. I don't know what happened, Todd. I wasn't watching COMEX trade a lot here today. Let me just see what you guys got. We'll get through this and we'll call it a. Yeah, I should bring. I've got a good friend at Wyckoff, expert actually. Um, I don't know. I'm really not studied Wyckoff at all. Uh, I've been talking about those. The only difference is, I I'd have to see. I'm not seeing the distribution in the database, and that's the only thing that keeps me pointed in the direction I am. So that's a great question. I don't really know Wyckoff enough to do it. And usually, what I'll see when I talk about distribution patterns, that'll be one of the elements. Will be I'll be able to see a negative rotation coming in database, those kind of things, where you can actually see that rotation a bit. Uh, no, I've never used Doji indicators. I have no idea. Steve Nissan and I worked at Merrill Lynch together when Steve was writing the first book. I don't even know if Steve's around. I haven't talked to him in 30 some years. But yeah, I don't know about the dojis. Yeah, I think so. Ukraine OTB, is it time to hedge those positions? It depends on what they are. They're part of the new rotation or not. And for me, I would probably look at our modeling to see when they came in. And let's see here. Yeah, that's kind of interesting. Floyd's Garage. That's now you're giving a private company, if that's true, unfettered access to AA model. Yeah, I don't know. I'm not sure how I feel about that. Yeah, I haven't looked at this Netflix. I know there's a lot going on with all the big deal. Yeah, I think all these markets, I'm just seeing some general question here. I'll just say, the sideways movement. Like I said, what biased me is how the database is positioning to see if we start to see any rotation out of symbols and we start to see some of the metrics break down, then the distribution, Wyckoff or whatever, just distribution pattern will become more real. And it's interesting because a couple things, folks, that because these are models that I developed, so when I see these rotations, I know the characteristics of our modeling process and how things look. I've lived through the very first year we had that database at a point where we could see that the big picture was 1998. So since then, and the .com burst, man, that was classic. We nailed that because the rotation was very clear there. Let me just look a couple more questions here. Yeah, I never know what Goldman's telling you on that. Most shorted large cap stocks measured by short interest. Yeah. Uh, yeah. Yeah. Cardone's very, very frustrating guy for sure. I see somebody. Yeah. Uh, Probably one more question here, see what comes up. What are the settings for the fib ratio? I would use just the standard settings. I do not think I'm on the other page to see if I can see anything. Inputs. I have pivot strength 6 and 6. Let me bring that up real quick. Yeah, so you can see 6 and 6. Sometimes I'll use a 4-4 on this. And if we click on show pivots, yeah, so this is the 6-6 pivot range. So it's pretty zeroed in on these. Just know when you have those, it takes it. I wish it predicted the day that this happened, but the patterns that come out would where you see the dots start to show up on this page. Let me zoom in. Like you'll see the low pivot, the high pivot, then right where those dots. That's where the calc is starting right there. So it usually does a pretty good job. You can see we came kind of typically between fib target 1 and 2 is where the range is. This is Bitcoin, but so somewhere in this range where this 21 is coming in is where that's going to come up. All right, let me just look one more question and we'll call it quits. Yeah, we're right at 1 hour right now. Yeah, so somebody's going the smelters are clogged, but if you've got the CME behind that trade, the dealers, the big dealers, the big boys, they'll get you in there to deliver, and I don't know that they will screw. The only way to find out is to get in there, but the typical smelters. But there's a whole network of approved smelters and people to certify the COMEX stocks. So, but for sure, even if it takes a while to get in the smelter, you've locked in the price. That's your goal, right? So the question is, if you're trying to sell 10,000, no big deal. 2 contracts, nanosecond, you don't even need a big account. You can lock it down, and you can use, once you get this delivery set up and they get delivery, that's the collateral for the trade. You don't even have to put money up once you've got it certified. And this goes at whether it's cattle or whatever. It doesn't matter. I mean, I started on CBOT back in 1979. I mean, that's first things in the questionnaire and how to is understand the mechanics, the delivery. I had a client have some, back when there was CME and the CBOT, when they weren't all one entity, I had owned some lumber contracts, and literally the delivery process, there was, if you know anything about Chicago, it's the largest switching yards in the country or in Chicago. So they literally moved a railroad car with a bunch of 2x4s on it from one track to another, and that was delivery. And it was amazing how expensive the deliver lumber was. And I don't know why he did that, but I remember going through the process, and that was probably 1980. I know those of you, I remember the day. 2 days I remember is one is when Mount St. Helens went off, because I was long lumber, and lumber prices just blew up. And then the other one was the day that the shuttle blew up, and I had a client that was long frozen orange juice, was just a trade that he put on. And it was so the day the shuttle was a very emotional day, and the markets were reflecting full on emotions, and he had bought some OJ options too. So they were just through the roof. Anyway, folks, always good hanging out. Giving the old man some thumbs up would be really good. And I'm still trying to get this channel back to where it should be. So hopefully we'll keep showing up as many days as I can in a row, and we'll move forward. So thanks again for being part of the channel. Hit the like button, subscribe, do all those things. Okay? It's greatly appreciated. It does help. All right. Talk to you soon. Enjoy the music. JJ Benzie, yes, you can. I'd have to know a little bit more, but the delivery is the same way at a retail broker. I don't know. They should have facilities because they're members of the exchange. They should be able to do it. You could do it at a small futures dealer too. Some of the players out of Chicago. Hopefully you're hearing me. Have a great evening, everyone.